This week, the Reserve Bank of Australia faces a choice that could ripple through every household, business, and industry. Will they cut interest rates or will they hold steady? And more importantly, what does it mean for you? Let's dive into the explosive truth behind the numbers and uncover what's really at stake. The big question: will the Reserve Bank lower interest rates? Most experts think they'll cut rates by 25 basis points, bringing the official cash rate down from 4.35% to 4.1%. It would be the first cut in over a year, sparking hope for mortgage holders and businesses alike. But here's the catch: inflation is still too high. While headline inflation has eased slightly, underlying inflation remains stubbornly above target. Unemployment is low, but cutting rates now could risk reigniting inflation, so nothing is certain. Now imagine this: instead of cutting rates, the Reserve Bank shocks everyone by holding steady. What happens next? First, the markets would react instantly. The Australian dollar would likely surge, making exports more expensive but imports cheaper for a short time. For households, imported goods might get cheaper, but it won't fix rising living costs. Politically, this decision would spark chaos. The government would face heavy criticism for failing to ease the cost of living. Opposition leaders would seize the moment, saying the government hasn't done enough to help mortgage holders. For everyday Australians, especially those struggling with debt, the impact could be devastating. Take Caitlin Wood, a first-home buyer, who says even a small rate cut could mean the difference between starting a family and just surviving. Across the country, over a third of households are already relying on buy now, pay later schemes just to get by. A decision to keep rates unchanged would only make things worse. If the Reserve Bank does cut rates, how far will they go? Predictions vary widely. Some banks expect multiple cuts over the next year, potentially bringing rates down to 3.35%. Others predict a more cautious approach with only a few cuts to avoid reigniting inflation. But here's the reality: even with these cuts, interest rates will still remain relatively high compared to pre-pandemic levels. This isn't a return to ultra-low rates, it's a careful balancing act designed to stimulate the economy without letting inflation spiral out of control again. What about the property market? For homeowners and buyers, the stakes are sky high. A typical $1 million mortgage could save around $150 per month after a single rate cut. But banks aren't obligated to pass on the full benefit, so public pressure will play a big role. Even if rates drop, confidence matters. Property expert Gavin Hegney warns that if rates fall but people lose their jobs, property prices won't skyrocket. Auction numbers are already down nearly 14% nationwide, signaling a fragile market. It's not just about lower rates, it's about whether people feel secure enough to invest. The global threat: tariffs and trade wars. Let's zoom out. Across the Pacific, trade tensions are heating up. New tariffs imposed by the United States on Chinese goods are creating ripples that could hit Australia hard. These policies threaten key exports like iron ore, education, and tourism while driving up import costs. The Australian dollar has already fallen sharply since last year, raising fears of imported inflation. Economist Fabrizio Carmignani warns that these tariffs could derail the entire rate-cutting cycle. In an interconnected world, domestic decisions can only do so much when faced with global pressures. So where does this leave us? On one hand, lower rates could revive consumer spending, ease mortgage pain, and stabilize growth. On the other hand, premature cuts could reignite inflation, especially if global trade tensions escalate. This isn't just about one decision, it's about whether Australia can navigate a world where politics and economics collide. Will this be the start of a new era or just a false dawn? The answer lies in understanding the bigger picture, and we're here to help you make sense of it all. Stay tuned for updates as events unfold. Whether you're a homeowner, a business owner, or just trying to make sense of the economy, understanding these changes is crucial. Smash the like button, subscribe, and hit the bell. We'll be back tomorrow with more insights and analysis.